So, welcome back to the channel, traders, community members. Hope you're all doing well. This is Crypto Bullseye, and this is episode 2 of our tutorial series. And we're going to be looking at the Stochastic RSI. We're going to be looking at what is the Stochastic RSI, and we'll be applying it to our trading strategy. So, if you haven't watched episode 1, go back and watch that. That is how to identify the trend, types of trend, and how we apply trend lines to the specific trend that's in play. That's going to link up with the Stochastic RSI, which is this episode, and episodes to follow will also link up. So if you do like the content, give us a thumbs up, subscribe to the channel, hit the notification bell, and you'll be notified when the next episode comes out within this series of tutorials. And if you have watched episode 1, welcome back to the channel. Let's get into the tutorial. Right, okay, first thing I want you to do is, whatever platform you're on, I'm using TradingView. If you go up onto your indicators tab in TradingView, it's in the middle menu bar at the top. Click on that, and then you pull up Stochastic RSI by just typing it in the search bar. So once you've got the Stochastic RSI, you can add it to your favorites by clicking the orange star, and it'll stay within your favorites there. We've got that, and it's applied to the bottom of the chart. What we'll do is we'll just go into that a little bit more closely, and you'll see that the Stochastic RSI is split up into 3 different regions. Before we look at those regions, I just want to explain that it's an indicator that was created by two guys, Stanley Kroll and Tushar Shande, and those guys created this strategy in 1994, and it's based on an algorithmic calculation of the standard relative strength index. So they've used that as the base and built in the calculation, and this is the result of it, Stochastic RSI. So the 3 areas is overbought, signaled by 80 to 100. It goes from 0 to 100. 80 to 100 is overbought, and 0 to 20 is oversold. So you see that you have these waves in between, and this changes hands as far as money flow is concerned. It's the change of hands of money flow, but it's in oversold and you need a cool off, and overbought and you need a cool off, and oversold and you get to have a little bit of a run. So it's not an indicator that you use in isolation as far as trading is concerned. You can use it in addition to other price action indicators. We've seen that in the previous episode we looked at trend lines. If you haven't seen that episode, go back and watch that, because it's run in conjunction with the Stochastic RSI in this specific strategy. So the midsections 20 to 80, and that's quite a large midsection. The areas that we're going to be looking at and that we're interested in on this strategy is the overbought and the oversold territory. So we'll add those in conjunction with our trend lines. Let's get the charts up and have a look at examples of that. So you'll see that overbought here, overbought in the stochastic, we were due a cool off. Just get that up. We were due a cool off, seeing price reacted. Due a cool off, price reacted. So like I say, you use these in conjunction with a trend line. If we use this as an example of the trend, we've broke below the trend here, signaled by weakness in the stochastic. You've got a cross on the stochastic, which is important. When you do get a cross in the stochastic, it's another indicator that tells you that there's going to be some kind of a reversal. So we've got this the cross, and price actions pulled down again in this instance. So you use Stochastic RSI in conjunction with the trend. Also other additional filters such as standard price action, naked candlesticks, other things that we're going to be talking about in later episodes, but I just wanted to show you how to apply the stochastic and what it means first. We'll go into some other examples next. Right, okay, back on the TradingView charts. I'm actually trading Bitcoin against USDT, or the chart that we've got up is USDT against Bitcoin for this example in the tutorial. And you see that I've got the Stochastic RSI up at the bottom, and we've got price action at the top. If we apply our trend lines like we showed you in the previous example, in the previous tutorial should I say, we've got trading in an upwards channel. How can we use the stochastic to tell us whether we're likely to get for example, a break and a close above here and a continuation up, or a break and a close to the downside and a continuation down? Is there any clues that we can use in addition to standard price action that's going to tell us that price is going to move in the opposite direction? So up here, we know by the stochastic that this is an area of overbought territory, signalling a cool off. The RSI can continue for a longer period of time at the overbought territory or the oversold territory. However, usually after a cool off indicates the bulls or the bears, depending on which direction the trade's moving, that there's a little bit of momentum to be gained. So it's an indication to tell, once you've had this kind of a cool off down here, the bulls and the bears, their indicators are going off. It's in an oversold territory, and they can start stacking up depending on what their entry reasons are for the next move up. So we got an idea there. The stochastic RSI told us that the market was in overbought territory, and we had the cool off back down. Same again, up, and what's the market telling us here? Didn't quite make a high as the previous high, and a cool off. And then we get the run again, overbought, the big cool off. Now this is an important level here because this shows weakness in the market. We've broke and closed out of this channel, and did the stochastic let us know? Let's have a look. We've got a stochastic cross just after this green candle, signalling that we were due for some kind of a reversal. We had a full-bodied red bullish candle which pushed straight out of this trend line and closed below, which is another indication that price action is likely to reverse. And we can use all these things in confluence with each other to gain additional possibilities as to the possible direction of the next move. So as traders, we're just gaining probabilities on the likely move next. So there's two things that I've given you now in the first two episodes as to how you can add probabilities to your trade. So firstly, we're identifying the trend. Is it bullish momentum? Is it bearish momentum? Are we trading in a sideways range? We're applying the stochastic RSI, and we're looking at areas of overbought territory between 80 and 100, or oversold territory between 0 and 20. We're applying those to the trend lines to give us clues as to whether the market's overheated, and we can use those two in confluence with each other to find out whether there's a higher probability of the next move. So we can get clues from the market. That's what we're looking for, additional clues in the market, and that's just the first two tutorials. So they're all going to link together, and I'll give you two ways now how you can tell where an entry is good. We're identifying, first of all, which way is the trend going, building your rules, what type of a trader are you. Let us know what type of a trader you are actually, because we want to tailor our content around you. Are you a continuation of trend trader? Certainly if you're a beginner, I would recommend that. You want to be trading with the flow of money, swim with the whales. Are you a breakout trader? Let us know about that. Let us know what level you're at, because we want to tailor the content around you, and we want to grow the education and this journey together. So let us know if you have liked these series of tutorials. If you did like this tutorial and you did know anyone else that might like it, share it with them. Hit the like button, subscribe to the channel, notification bell on. You'll get the next tutorial episode straight on your inbox as it's come out. Thanks again. Enjoy your day, guys. Happy trading.